Thank you so much for joining us here on the Market Day Report. I'm Marlon Bowling with you. We're going to take a look at your grain and livestock market action. And we'll take a look at your grain market here first, and we'll bring in a little extra help direct from Chicago, where the trade is originating right now. Let's go to the trading floor at the CME Group, where we have OliverSloup standing by. He's with iiTrader. Kind of a softer start to the grain session here so far this morning, but boy, we have had a tremendous surge in the U.S. dollar this morning. The Dow has been higher too. Explain what's going on and maybe some of the dynamics at work here affecting the ag trade today, could you?
Yeah, I'm glad you brought up the U.S. dollar. If you weren't going to bring it up, I was going to. We're right at the brink of multi-year highs. The highest level going back to 2015, I believe, was about 500 points higher, about 172.5. That's going to be a big level for us. And we've seen this happen. Last year was a perfect example, sort of this time of year, where you get the anticipation of the Fed raising rates. You get the bid under the U.S. dollar. However, a lot of that is already being priced in. So after the Fed raised rates last December, you actually saw the dollar come off. So you're seeing the anticipation buyer step into the market, and it'll be interesting to see if they do actually hike, if we see a continuation of dollar strength or see it come off like we did last year. But nonetheless, a stronger U.S. dollar this morning is definitely putting the pain on commodities bulls across the board, not just in the ag sectors, but also if you look at crude oil or the gold market, that's seeing a lot of pressure as well this morning.
Well, and this all follows the fact that we had USDA announce several overnight sales. We had 2 sales of soybeans, almost 500,000 tons. And we had another sale of grain sorghum this time around. Everything went to China, at least on half of the grain or part of the grain and the grain sorghum sales. So that was a pretty good productive number over there, but it didn't seem to perk up this grain trade at all. Is it just that the higher U.S. dollar is overpowering everything at this point?
I think it is. We talk about the U.S. dollar a lot. You get the U.S. dollar right, you get a lot of things right. And sometimes it doesn't have necessarily a perfect correlation, but I think once the U.S. dollar gets above that 98 level, which we've been trading above, it really starts to have an impact on these commodities. And we're definitely seeing that play out as we cross this 100 level, which we haven't seen in almost a year. On top of that, we had that USDA report last week that kind of put a bearish tone under the market. So I think you're seeing some continuation of the bearish report last week, as well as a stronger U.S. dollar, really putting kind of a damper on things in the early morning trade. There are a couple key levels to keep a very close eye on. For the December corn contract, 335.25. That's the October lows. The bulls desperately kind of need to hang on to this level on a closing basis. If we're able to do that, we might be able to neutralize this bearish tone and get a little footing towards the upside. But if that gives way, I wouldn't be surprised to see the sellers step back in.
All right, on the corn right now, we have December down 3.5 cents. We're trading at 336 and 3/4 per bushel, about a nickel off our high of the day, or 4 cents anyway. March down 4. Looking at the soybean trade here, where we had very good overnight export sales, we're lower across the board. January down 6.5 cents at 979.5 per bushel. And as we move on to the wheat trade, by the way, that's about a dime off our high there. In the wheat, we have December Chicago wheat down 9 right now at 394 per bushel. March down 7.5. On the Kansas City wheat, as we roll over, we have December down 7.25. Last trade 403 per bushel. That's over 8 cents off of its earlier high, and the March down 6.5. In Minneapolis spring wheat trade, here we have December currently down 2 3/4 at 517.25. And in the cotton market right now, we have December currently down 23 points. It's showing a last trade of 68.21 cents per pound. It got as high as 69.01, so it did breach 69 cents for a little bit when it would have been a little higher at that time. That's a look at our crop markets, and Oliver will bring you back here in just a moment, and we'll examine what's going on in the livestock trade and maybe some of the impact all these outside markets are going to have when we come back right after this. Well, we're talking with OliverSloup of iiTrader in Chicago, and I wanted to take a look at some of these outside markets that Oliver was referring to a little bit ago. We were talking about the dollar being higher by over 1,100 points this morning. The Dow Jones Industrial Average has been surging ahead at times, and right now it's at 18,843, so we're just about treading water, down about 4 points right now. So it's gone from higher to just slightly lower on the day. The gold market kind of taking a hit here today. We can take a look at that on the gold futures. This is your precious metals. We have December actually down $11 now, 11.10 to the downside at 12.1320 per ounce. So that's the latest on that side of the equation. Now let's talk about livestock trade here, Oliver. Live cattle, it's hard to get its footing here this morning. We just really can't seem to get much traction going on the live cattle side, even though we had cash cattle markets develop that were kind of steady on Friday. Right now, December live cattle futures down 20 cents. We're at 105.40 per hundredweight, almost $1 off our earlier high already. February weakening up. We're down 45 now at 105.85 per hundredweight. On the feeder cattle side, here we did have a lot more strength in the early going, and we're still much firmer than live cattle. January up 73. We're trading at 121.75 per hundred, and now March is up 40 at 117.85, almost $1 off of its high. So what is getting into this cattle trade here today? Is that actually the dollar spilling over into the cattle side as well, or what's at work here?
I think the currency fluctuations are definitely having some sort of impact, maybe not as gruesome as in the grain trade, but the cattle chart is really technically shaping up very well. We've been talking about the live cattle 105 level being very key over the past couple of sessions and really the past couple of weeks. I think I was on last Thursday talking about if we get a close above that, we could go see higher highs. We got above to the highs going back to September, which is nice to see. So as long as we can hold price action above the recent lows of 103 that we're looking at, I think we shape up really well. Higher highs, higher lows is very friendly to the bulls in this camp, and that's what we're kind of looking for going forward. Key resistance level to the upside, 107.75. If we're able to maintain strength and get up there, I wouldn't be surprised to see some bulls take some profits at that level.
Technically speaking, don't the feeder cattle charts look a little better than live cattle charts right now, though?
They do, but there's a couple things you have to be cautious with the feeder cattle market. One of them being the very thin volume. It trades a lot fewer contracts per day, so the swings are going to be a little bit wider and the volatility is going to be a little bit higher. Topside feeder cattle January contract, we're looking at 125 as a potential near-term target. Really need to stabilize above 119.5 on a closing basis. If we're able to do that, I think we bode pretty well for the bulls here in the near-term future throughout this trading week.
Okay, let's switch over to the lean hog side and look at the futures over there. Now, we closed under a little pressure Friday afternoon, about 22 cents lower. Right now, we're seeing big losses in the lean hogs. December down $1.47 of 45.65 per hundredweight. That's getting close to $1.50 off our earlier high. February down 167. What's going on here?
Well, we saw a lot of buyers step in the past, about 2 weeks ago, where we had that dead cat bounce is what a lot of traders were referring to it as, and then we kind of got a buyer strike. There were no more buyers to get us out above key technical resistance, and when you stall out in a bearish market, the sellers tend to step back in very quietly, and then all of a sudden, they all want to get in really fast, and I think we're seeing that here this morning, pressure coming in. 43 is going to be very key technical support on a closing basis. If that gives way, I wouldn't be surprised to see us go retest the recent lows and potentially make new lows on the year. All
right. Thanks, Oliver. Appreciate it again. OliverSloup with iiTrader in Chicago. So that's the very latest, Christina, from the trading floor, getting even weaker in the lean hog trade. A little concerning right now.
A lot of analysts say it's tied to the currencies.
Boy, that's going to be the name of the game today. You bet. Watching the dollar and the stock markets, too.
Okay. Thank you so much, Markets Editor Marlon Bowling.